When you look at the price action in developed currencies over the past several days, the takeaway is a market that has been doing a lot of back and forth and up and down trade, but that hasn't really gone anywhere at all. If we use euro dollar as a proxy and consider the move that preceded this consolidation that began in early June, the bias would favor more US dollar appreciation, with the euro having sold off aggressively into the consolidation. So based on this consideration, the outlook would have the euro looking for a bearish continuation that would trigger on a breakdown below the yearly low at 115.10, opening the next downside extension towards the 112 area. And by extension, this would likely translate to dollar strength across the board. But if we take an even bigger step back and look at the euro price action since 2017, there would be good reason to classify this consolidation as a consolidation ahead of a resumption of a breakout and medium-term uptrend that triggered back in 2017 when the market broke out above the 115 area, leading to a plus 3-year high earlier this year. And so, with all that said, we have clearly reached a critical inflection point where the market is going to need to figure out if it wants to commit to seeing another big dollar run, or if it has exhausted dollar upside and is now finally in the process of slowly getting back to selling the buck again. Fundamentally, the battle comes down to whether or not the U.S. administration is effective with its efforts to weaken the dollar by way of its radical transformation of U.S. trade policy. This has become the central point of focus in 2018 and will likely be what ultimately determines how it all plays out. Until then, we don't see any point in reacting to these up and down moves until the euro breaks down below 115.10 or back up above 118.50. And as we head into Friday, the euro sits right in the middle zone of this range. As far as the Friday calendar goes, the big standouts don't come until the North American session, with U.S. GDP data along with Michigan confidence readings due. That's all for now.